right, ladies and gentlemen, this is going to be a trade recap for the two trades that I took, um, AUDUSD and USDJPY. So we're going to start on USDJPY. I took this trade on Monday night before Alex sent out the signal for AUDUSD. So on the weekly, we can see it is clearly bullish. We had a lower low, lower high, lower low. We shifted, and now we are having a higher low, higher high, and a higher low. Initially, for this trade, I was expecting price to retest previous weekly structure and continue to go up. Unfortunately, we did not see that happen. I was waiting for the 4-hour to shift bullish above this 4-hour area of interest, retest the EMA, and to continue heading up, something along these lines right here. Now that didn't happen, and price actually broke back below and then retested the 4-hour area of interest. Once we retested this 4-hour area of interest, I then zoomed in on the 30-minute and watched the price action being created. I saw that we entered the 4-hour area of interest and rejected it to the downside, kind of like we did here to the upside. And then I saw a very violent push off of this 4-hour area of interest, and I waited for the retracement. After I saw another engulfing candle being created at this area of interest, I then entered the trade right here. This was around 1:30 a.m. pre-London session. I set my stop loss above these wicks over here, kind of above this area of interest, and I had two stop losses actually. I took this trade on a couple times on a couple accounts, and the first stop loss was actually 155,500, and I actually got wicked out of those positions, and the only positions that remained were the positions that were 155,550. And the rest is basically history. We rejected the area of interest a couple more times before then having to push around 8:30 in the morning. So I woke up and was very pleased to see that price had fully rejected this area of interest on the 30-minute, on the 1-hour, and the 2-hour and the 4-hour. Now, the reason I took this trade, even though we only had one area or time frame in sync, is because of the fundamental effects that the tariffs have been having on the USD pairs. Normally, the dollar would get stronger and the Japanese would get weaker, or the Japanese yen would get weaker. But we're not seeing that happen. We're seeing the opposite effect take place, and that is going to happen across all pairs for the upcoming weeks and maybe even months. So I saw that we failed to break above this 4-hour area of interest, failed to retest and reject it. Our EMA actually held price down stronger than it held price up. So once we basically retested from the lower side, I zoomed in, looked for my rejections for my engulfing candles, and that is when I entered this trade. I held for a 1 to 8 risk to reward ratio, and I'm very pleased with that. I see that price is continuing to head to the downside, and I anticipate it may end up, you know, heading to these daily levels and this weekly level right here. It may reject the weekly EMA, but I decided to get out of the position before that happened. Now, for AUD/USD, or actually, let's look at the confluences that we had for this pair. To sell, we can actually build it. We can build the confluences together. So the weekly is bullish. The daily was bearish from this point to this point, and the 4-hour at the moment that I took the trade was actually bullish. So we only had two time frames in sync. So actually, I shouldn't have taken this trade at all, but it is what it is. So we had an area of interest. We were at around psychological level, which was 155,500. Technically, I set my stop loss above that round psychological level. On the weekly time frame, we weren't rejecting an area of interest. We weren't creating a pattern. We weren't having a candlestick rejection. None of the weekly lined up because we were taking this trade on the lower time frames. Now on the daily time frame, um, we didn't have much happening either. We could kind of count this as like an ugly head and shoulders, and we kind of retested the neckline here, but we're taking the trade down here, so that doesn't even make sense to mark up. However, we do kind of have a daily area of interest if we mark off this one structure point, this two structure point, and this third structure point. So technically, we tapped into this daily area of interest. So yes, we have a daily area of interest. We don't have a pattern. We have a candlestick rejection, and we are retesting previous structure and the 50 EMA on the daily. We're trading under the 50 EMA. Now on the 4-hour, we can zoom in, and we have a do we have a pattern? We kind of have a head and shoulders right here. If you look closely, we have a shoulder, a head, and another shoulder. Okay, so we were kind of trading under this neckline. We retested it once, we retested it twice, we retested it 3 times before then having the move to the downside. So we have a pattern. We have some rejections of this area of interest. I would count this as a rejection candle. It is an indecision candle, a doji, whatever you want to call it. Rejecting previous structure level. Yes and no, not really. Retesting the 50 EMA, yes. And do we have a shift of structure? If we zoom into the 1-hour or the 2-hour, we have a lower low, lower high, lower low, lower high. We don't have a shift of structure on this time frame. We kind of have a shift of structure on this time frame here. Actually, do we? Not really. Maybe on the 15-minute. On the 15-minute, yes, but at the moment that I took this trade, there was no shift of structure, but there was an engulfing on the 30-minute. So the trade would be a B setup overall, a B setup, and I can journal the trade right now because I forgot to do that earlier. So this would be how I journal the trade. I zoom out, get a good look at everything, and hit journal trade, okay? Entry price was around 155, 230. Stop loss was 155, 550, and exit price was 152, 700. Okay, so the trade has been saved to my journal. Now I have everything that I need to look at this in the future. Okay, so next trade breakdown will be AUD USD. Let's zoom out and take a look at what's happening. We are bearish on the weekly, on the daily. We are bullish. We're bullish on the daily from this point to this point. So bullish on the daily. The 4-hour is technically bearish. It was bearish from this point to this point. Now it is actually bullish from this point to this point. But it was bearish. So we only had one time frame in sync. And Alex took this trade and sent out the signal, I believe, because we did not have a weekly wick at the moment. We were kind of trading down here. Price opened and took off to the downside. It swept out everyone who was taking buys in this area. Now, if we zoom in even closer, we can see price is trending to the upside. On the 1 hour, it's kind of creating, higher highs, higher lows, but technically we are bearish on the 1 hour from this point down to here. I think Alex took this trade purely based off of his previous market experience. So we were creating elbows to the upside, and he took this trade after this engulfing candle happened right here and set his stop loss under these wicks. We are trading above this EMA on the 30 minutes and I believe on the 1 hour as well. So he was anticipating for price to hold up and above this EMA, which is what happened. Now I took this trade, I closed it at a 2.36, 2.35. I didn't want to get greedy and I had already made the money that I wanted to make. We could have held for 1 to 3, but I did not feel like doing that. And that is basically a recap of the 2 trades that I took this week. I will not be trading any longer, but I may send out some more trade ideas in the Discord, which is in the link tree, which is linked to my bio on School. So take a look at that. Thank you for watching and have a good rest of your week. Bye.